Have you ever wondered what goes into the pre-approval process? Hi, Joe Hoagland here with Berkshire Hathaway Home Services. Today we are going to bring in one of our lender partners to go over the pre-approval process so you know what to expect, and also so you know what is happening behind the scenes. Here is Levi with Prosperity Home Mortgage.
Hi, Levi Sukup here with Prosperity Home Mortgage. We understand the approval process can be a bit intimidating, so I'm here to go through what you can expect. The first step will be to talk to your lender. Now, regardless of how you like to do business, your lender should be able to accommodate by either taking your application directly over the phone, applying online, or even setting up a time to meet in person. This application is giving the lender a good picture of your exact situation so that they can review that. And when talking to your lender, it's also good to make sure you mention what your maximum monthly payment you would like is, because that way they aren't going to approve you for something you would never even buy. Along with your application, your lender will also want to see your most recent pay stub, most recent 2 years W-2s, most recent 2 months bank statements, and your ID. This will allow them to document the information you provided in the application. Once your lender has the application and upfront documents from you, they'll then work on reviewing it to get you pre-approved. Now, what they're looking at when doing this is your credit, your income, your debts, and also your bank statements to make sure you have enough money to close. When looking at your credit, what they're looking at is to make sure that you've made your payments on time every month. Now, you don't have to have perfect credit in order to buy a home. You can actually buy a home with a credit score as low as 580, although having a credit score of at least 620 does make the process much easier. On income, the lender is going to look to make sure that your income is consistent and is likely to continue. They're going to want to see a 2-year history on your income and your work experience. Next, the lender will look at your debts, or what you may have heard referred to as your debt to income. This is the amount of debts that you have compared to your income. Now, those debts consist of auto loans, personal loans, credit cards, and even the monthly housing expense. It does not include utilities, cell phone bills, or that type of thing. When reviewing the debt to income, the main goal of the lender is to make sure that you have enough money to live after you've made all your monthly obligations. The last item your lender is going to look at are your bank accounts. Now, what they're looking for here is just to make sure that you have enough money to close on this new purchase. And if you think that might be a little bit of a stretch and you're trying to figure out where you might come up with a little more money for down payment, please know there are down payment assistance programs available, and to learn more, check out this video about the NYFA down payment assistance programs. After your lender has had a chance to review all of your information, they'll reach out to you to discuss your options, provide an approval letter, and also provide a cost estimate which will break down all the costs associated with the purchase.
Thank you so much for watching another video, and don't forget to like and subscribe. Chris told me to say that.